Welcome, everyone, to today's deep dive. We're going to be taking a closer look at Alibaba's stock and figuring out if it could be a good fit for your portfolio. We've got some pretty interesting information for you today, pulled from sources like companiesmarketcap.com, tipranks.com, Wikipedia Stock Analysis, and Zex.
Yeah, it's always smart to, you know, look at things from multiple different angles when it comes to investing. So we're
Right.
definitely trying to give you the full picture here.
Exactly. So why don't we kick things off by looking at Alibaba's market cap? It's pretty impressive, clocking in at $209.34 billion. That's according to companiesmarketcap.com.
Yeah, that puts Alibaba at number 56 globally, which is pretty significant. Being in that top 100 really says something about a company's size and financial strength.
Absolutely.
Yeah.
So it definitely seems like they have a pretty solid foundation. But let's dig a little deeper into their financials. What do those numbers tell us?
Well, we can look at Zacks for some insights into that. They've actually given Alibaba a AA rating, an A for growth,
Right.
and an A for value.
Wow, that's a pretty strong endorsement. What exactly do those ratings tell us about Alibaba's performance?
Well, that A for growth means that they're seeing some pretty healthy expansion in terms of revenue and earnings. And the A for value suggests that their stock is trading at a price that's attractive relative to what it's actually worth.
So does that mean they might be a good option for investors who are looking for both growth and value?
Yeah, potentially.
Yeah.
It could appeal to a pretty wide range of investors depending on their individual goals and risk tolerance, of course.
Of course. So what about analyst predictions? What are the experts saying about Alibaba's future?
Well, according to tipranks.com, there are 15 Wall Street analysts who have a 12-month price target set for Alibaba. And their average prediction is that the stock could climb to around $127.05.
So that suggests there's potential for some pretty decent gains.
Potentially, yeah. But I think it's important to remember that those are just predictions. There's always a range of estimates. And in this case, it actually spans from a low of $105 all the way up to $146.
So there's definitely some variability in what the analysts are expecting.
Right. And each analyst likely has their own reasons for those specific numbers. It's always worth digging a little deeper to understand their rationale.
So let's take a step back and look at Alibaba's recent performance. How have they been doing in the past year?
Well, if you go back to companiesmarketcap.com, they've actually seen a pretty decent stock price increase over the last year. Their stock price has gone up by 21.11%.
That's definitely not bad. It sounds like they're on an upward trajectory.
It is a positive return, but to really get the full picture, you also have to compare their performance to the rest of their industry. And according to data from tipranks.com, Alibaba has actually underperformed compared to its peers over the past year.
So while they have grown, other companies in the same sector might have performed even better.
Exactly. It just goes to show that you can't just look at the numbers in isolation. You always have to consider the broader context.
All right, so we've looked at some of the numbers. But what about the bigger picture? What kind of company is Alibaba really?
Well, Wikipedia actually provides a pretty comprehensive overview of their history and operations. And one thing that really stands out is the sheer number of acquisitions they've made over the years.
It sounds like they've been pretty active on that front. So what kind of companies have they been targeting?
Well, it's actually been a pretty diverse range of acquisitions, spanning sectors like e-commerce, logistics, and even media.
Wow, so they're not just sticking to their core business.
Not at all. It seems like they're trying to build a whole ecosystem of services, not just focus on one specific area.
Interesting. So it sounds like they're really looking to expand their reach.
Definitely. And we'll dig into that more in just a bit. But first, let's take a quick break, and we'll be right back to continue our deep dive into Alibaba.
It seems like they're on a pretty aggressive acquisition spree. What's the thinking behind that?
Well, it definitely seems to be a key part of their growth strategy. They're not just looking to expand in e-commerce, but also branching out into other areas like logistics, media, and even cloud computing.
Speaking of cloud computing, Wikipedia mentions that Alibaba has a growing presence in that space.
Yeah, their cloud computing division, Alibaba Cloud, is actually becoming a pretty major player.
So is that a big part of their overall strategy now?
It definitely seems to be. They're competing head-to-head with some of the biggest names in the industry, like Amazon Web Services and Microsoft Azure.
Wow, it's very impressive.
Mhm.
So they're not just an e-commerce company anymore. They're becoming a real tech powerhouse.
Exactly. And that diversification into cloud services is a smart move because the demand for cloud-based solutions is just skyrocketing.
It definitely makes sense. So let's shift gears a bit and talk about ESG factors. Wikipedia mentions that Alibaba has been putting more emphasis on environmental sustainability, social responsibility, and corporate governance.
Yeah, and that's something that a lot of investors are paying attention to these days. A company's ESG performance can really make a difference.
So it's not just about doing good, it's also good for business.
Exactly. Investors are more likely to put their money into companies that are aligned with their values. And a strong ESG profile can also help a company attract and retain talent, and potentially reduce risks associated with environmental regulations or social controversies.
It definitely makes sense to consider those factors.
Hmm.
So let's move on to Alibaba's dividend policy and share buybacks. Stock Analysis has some information on that.
Right.
Starting with dividends, do they have a history of paying them out?
Well, according to Stock Analysis, they don't actually have a track record of paying dividends.
Is that unusual?
Not necessarily. It's actually pretty common for growth-oriented companies, especially in the tech sector, to reinvest their profits back into the business.
So instead of giving money back to shareholders, they're choosing to use it to fuel further expansion.
Exactly. They're prioritizing growth over shareholder payouts at this stage.
Makes sense.
Yeah?
What about share buybacks? Has Alibaba been repurchasing its own shares?
Well, none of the sources we looked at specifically mentioned share buybacks as a major part of their current strategy.
So it's possible that they're focusing their resources elsewhere, like acquisitions or investments in their cloud computing business.
Yeah, exactly. It seems like they have a lot of different initiatives going on.
We've covered a lot of ground here, from market cap and financials to acquisitions, ESG factors, and even their dividend policy. It's clear that Alibaba is a pretty complex company with a lot of different moving parts.
Yeah, there's a lot to unpack, but hopefully we're starting to get a better sense of who they are and what they're all about.
As we start to wrap things up, what are some of the key pros and cons that investors should keep in mind when evaluating Alibaba?
Well, on the plus side, they have a really dominant position in the Chinese e-commerce market, and they're also rapidly expanding their global presence. Their move into cloud computing and other services gives them some good diversification, and there's definitely a lot of potential for future growth. They're also financially sound with strong earnings and a solid balance sheet. Plus, their increasing focus on ESG factors is a big plus in the eyes of many investors.
So there's a lot to like about them. But what about the potential downsides? What are some of the risks that investors should be aware of?
One thing that always comes up when talking about Chinese companies is the regulatory environment. The Chinese government has been cracking down on big tech companies lately, and Alibaba has already faced some regulatory scrutiny in the past, so that's something to keep in mind.
So there's always that element of political risk.
Right. And then there's also the issue of competition. Alibaba faces intense competition both domestically and internationally.
So they need to stay on top of their game to maintain their market share.
Absolutely. And of course, the global economic slowdown is another factor to consider that could potentially impact consumer spending, which would obviously affect Alibaba's revenue.
Right, so it sounds like there are definitely some things to be cautious about.
There are, but I think it's important to remember that every investment comes with some level of risk. The key is to weigh the potential rewards against the potential downsides and decide if it's the right fit for you.
It's all about finding that balance. So before we move on, any final thoughts on the risks involved?
Just to reiterate, investing in Alibaba, like any investment, comes with its own set of risks. And it's crucial for investors to really do their due diligence before making any decisions.
Absolutely. We've provided some insights, but it's always best to do your own research and make sure you understand the company and the market before investing.
Couldn't agree more.
All right, so we've really delved into Alibaba, haven't we? We've looked at their market position, financial performance, growth strategies, and of course, the potential risks. As we kind of start wrapping things up, what's the one key takeaway our listeners should keep in mind as they continue their own research?
Well, I think the main thing to remember is that Alibaba is kind of at a crossroads right now. On the one hand, they have this incredible track record of success, and they have a ton of potential for growth, especially in areas like cloud computing.
Right, but on the other hand, there are those challenges that we talked about, like the increased regulatory scrutiny and that fierce competition they're facing.
Exactly. So it's not a simple black and white situation. It really requires careful consideration, weighing those potential rewards against those inherent risks.
Absolutely. So are there any other areas that our listeners might want to explore a bit further in their research?
I think it would be really valuable to dig deeper into Alibaba's acquisitions, specifically understanding which companies they've brought into the fold and how those acquisitions are being integrated into their existing business. That can give you some real insight into their long-term strategy.
That's a great point. It can really reveal a lot about their priorities and where they're headed. What else would you recommend?
Well, I think it's also super important to stay up to date on the regulatory landscape in China. Things
Hmm.
are constantly changing, and new policies or regulations could have a big impact on Alibaba's operations and profitability.
Right. So keeping a close eye on the political and regulatory environment is absolutely essential. All right, so this deep dive has given us a really solid foundation for understanding Alibaba. But as we've emphasized throughout, this is just the starting point.
Yeah, we've provided a framework, but it's up to each individual investor to do their own due diligence before making any decisions.
Exactly. Investing always involves risk. And what might be a suitable investment for one person might not be appropriate for another. So it's always important to consider your own financial goals, risk tolerance, and investment time frame.
Couldn't agree more. You really have to take ownership of your own investment journey.
All right, well, that brings us to the end of our deep dive into Alibaba. We hope you found it insightful and informative. Don't forget to subscribe to our YouTube channel for more in-depth analyses of companies that pique your interest.
And be sure to let us know in the comments which stocks you'd like us to cover in future episodes. We're always looking for new companies to explore.